Well, it was the day before the Brexit vote, and all is fairly sanguine at the moment, whether I'm looking at cable, euro sterling, the sterling crosses, whether I'm looking at the FTSE short sterling, or whether I'm looking at the gilt markets. We can certainly see fairly tight ranges, and I think that's just a reflection that everyone is obviously anticipating the Brexit vote, the meaningful votes, and ultimately what happens after that situation, looking at the probability trees and effectively the different outcomes and the likelihood of those outcomes coming to fruition, and ultimately what could be the reaction in UK assets as a result of those different outcomes. And I think that's a really good way of looking at this situation. You know, we have a volatility event ahead of us. If you're running sterling positions or have UK exposure, you know this is a potential volatility event, and our primary job as traders is to manage risk and therefore just look at the potential moves and whether your portfolio can absorb those type of moves. Now, if I have a look at the options market specifically and looking at the implied volatility and the implied move, therefore, which we can extrapolate from that by tomorrow's expiry, by the end of tomorrow, we can see that in cable we're looking for about 138, 140 point move. So the market is saying they've assessed the event risk around the Brexit vote, the meaningful vote, and they've suggested that cable will probably have around about 140 point move. So that suggests the upside is probably capped around 130, and the market's suggesting that the downside is probably capped around 127 as well. So, you know, you've got to understand how that means into your portfolio as well. Now, cable has had a nice melt up. We've seen really since around mid-December it's moved progressively through 125. I think the market wants to be bullish on the pound. I think the market really wants to take a very bullish view over the pound over the next 12 months. I mean, we've seen some calls from brokers for 150 by the end of this year. And of course, that relies on a positive outcome around Brexit and the idea then that the Bank of England will ramp up their rate hike expectations. We'll probably see the first rate hike being pushed forward from 2020 into Q1, Q2 of this year. And of course, the pound's going to benefit from that. There's going to be certainty in business. But that's a big if. And of course, that's where we are, and that's what the significance of this vote entails. So I want to have a look at two things. One is the vote itself, and then secondly, how the pound may trade going forward after that point. Now, in terms of the options market, again, around this vote, I think it's important to say, you know, we've looked at implied volatility. You know, cable is looking for about 140 point move by the expiry of tomorrow. We're looking for about 180 point move, and okay, that involves a bit of time premium, but the market's looking for about 180 point move in cable by the end of this week, up or down. It's directionally agnostic. And euro sterling as well seems to be sort of stuck in this 91, 89 kind of range at the moment, and you know, we're continuing to play that at least until the vote's known and we know the situation. So as we go into tomorrow's vote, we know that there will be a couple of amendments which will be voted through or voted against around about 6 o'clock in the morning, Eastern Daylight Time. There's been a couple of prominent MPs who have put forward two motions which look to be voted on, and they'll have some fairly significance within the longer term Brexit scenario. But the meaningful vote itself, this is the vote that Theresa May cobbled together with the EU 27 late last year, will take place between 6 and 7 o'clock Eastern Daylight Time. It's widely expected to fail. I mean, every MP has, or most MPs have given their view whether they're aligning themselves with Theresa May's plan or voting, you know, against it, perhaps in preference of a second referendum or a no Brexit scenario, a clean break and going to WTO rules. And as it stands, I saw a poll earlier this morning from Sky News that they've seen that they suggest that there's going to be about 198 MPs across all parties who are going to vote in favour of Theresa May's plan, and therefore about 423 against. There'll be a few that we just don't know the situation, and that leaves her short to get the required 320 votes to get a simple majority of about 120, 122 seats or so. Now, how the pound react in that situation, you know, I think that's what's largely priced into the pound. We've had a long time to understand that. I think, therefore, if we do see this failing by, say, 100 votes or less, we may actually see some stability, maybe a little bit of upside in the pound. The market expects this to thoroughly fail, but it's the question of the extent by which it fails. So I think anything less by 100 seats relative to the 320 that she needs, you know, that could be a bit of a positive there as well. If we have a look at the options market, I think it's really interesting to say risk reversals, which effectively look at the skew of call volatility relative to that of put volatility. 1 week risk reversals are showing actually a positive skew of about 0.4 times. That means that people recently have pared back that negative exposure, and the demand for call volatility or call options has actually really increased, and people therefore again looking for a positive resolution in the pound over the coming week. If we look at 1 month call volatility relative to put volatility in cable. Again, that's come from really deeply negative to a more equilibrium, a more neutral setting. So people have pared back that demand for put volatility, that call volatility has really taken over of late. And again, I think people want to buy the pound, but they just need to see a few of these grey clouds coming through. And so the vote itself, widely expected to fail, but it's the extent that we need to do that. From that point on, we need to go to Jeremy Corbyn and have a look at the Labour Party. What will they say? There's been a lot of talk around Jeremy Corbyn pulling a vote of no confidence on Theresa May's leadership, or should we say the Tory government there, and trying to force a general election. That will probably not see the light of day, because for that to happen, we will need to see the DUP party voting in favour of that, or actually a number of Theresa May's own government within the Tory party voting in favour for that as well. And we just don't see that happening at this stage. So Jeremy Corbyn has doubled down over the weekend and suggested that he will pull a vote of no confidence on the Tory government. The question is will that actually see the light of day? Most people expect that one to fail fairly significantly. But, obviously it is a risk, and we can't see that doing any favours for the pound in that situation. But of course the question then is, will he actually pull that vote of no confidence directly after the vote fails, or will he actually wait until probably the 21st of January and once Parliament resumes and we start debating Plan B, which is what happens after 3 sitting days. So we're not expecting any real big moves in the pound. It should really be priced in. But what we're looking at is whether Jeremy Corbyn pulls a vote of no confidence, and secondly, ultimately, how greatly this fails. Some people have even said this may fail by 200 odd seats or so, and I think that would be a pound negative. The next point is when we go back to Parliament on the 21st, after 3 sitting days, is there will be a Plan B. Now that Plan B will then be pushed forward to the EU, and it's unlikely that we're going to see any major concessions, although we really want to see whether they're going to give you any kind of legal concessions around the backstop. That seems very, very unlikely indeed. So whether the rebels will be infused by a potential Plan B is something that we'll have to see at this stage. But I think it's looking more and more likely that we will see an extension to Article 50, or potentially even revoked, which can now happen under the European Court of Justice. And again, that could be a positive for the pound, or it could be a negative. We'll see how the market reacts to that one. But it's looking more and more likely now that we will see Article 50 being extended probably through to July, perhaps even further in that scenario there. And that will give them time, therefore, to potentially even have and look at the merits of a second referendum, whether Theresa May herself and the Tory government call for a second or a new general election. I think there's a growing possibility that may happen over time. I think it's probably looking like it could be the only way to resolve this. The British public would have a new mandate, therefore, to choose a party and what they represent around this scenario. But it's looking more, in my opinion, that a new general election could come at some stage, and it probably would be the best way to resolve this. But there's also a lot of talk, once we go through the motions, that we could see a Norway-style model being adopted. And that's probably the second situation for me, is Theresa May will reach out across the backbenchers and try and create a plan that actually is infused by everyone. But I think certainly we're looking at the 2 stages. One is the vote itself and how the pound reacts, and then ultimately what happens in the stages beyond that. Will Article 50 be extended? What's the prospect of a second referendum? How will the pound react around that? The prospect of a new general election being called by Theresa May, whether or not the Tory party can actually form some sort of consensus for a new deal, a Plan B, potentially looking like a Norway model, which of course would be pound positive. Or will we actually see the UK crashing out of the EU longer term without any kind of plan? All of those have different pound scenarios, which we'll be covering going forward. But for me, you've got to have a look at the pound over the next 48 hours and realise that the market is expecting about a 140-point move. How does that play into your portfolio? What does that mean for your exposures there?